All right, so chapter 10, setup 1, shorting a false breakout. And this is what a false breakout looks like. You just saw a bunch of examples in the intro, but this is essentially a pattern where the stock is nicely trending up, and then on a breakout, suddenly and very fiercely and aggressively just reverses. Double top, strong rejection, and this is a place inherently where long bias traders are going to bail out, right? And I could show you, gosh, I mean, I could show you so many setups, but what was that one from just the other day that I got nailed on? Does anyone remember? It was a false breakout at the volume weight average price. It wasn't TAOP, it was something different. Oh gosh, let me look at my TraderView stats here. So it was, let's see if anyone posts before I find it. So I think it was on, yeah. It was this day here, and oh, it was SYPR. SYPR. All right, so SYPR got me right here, right in there, and it got me good. So I took the break through the volume weighted average price. All right, so let's look at this just as an example before we get into this chapter. All right, backing it up. Okay, so what I saw as really a tremendous amount of strength was, well, first of all, we did have a false breakout right here. That was a bull trap. So, and we had a little mini bear trap right there, and then it ripped back to the high. First candle to make a new high was a little bull trap. So this had already been a little tricky. On this candle, it breaks the volume weight average price right here. It comes back up to it right here, and it can't get above it. It tries to get above it here again, and it can't. And then right here, it surges through it. And as it surged through it on really strong volume right here, it's almost an inverse head and shoulders pattern. Not quite, but similar. And so I bought it as it was breaking through 612. I bought right as it was breaking through the volume weighted average price, and I added at 650. I was looking for a squeeze to 7. I was going for a big trade on it. Now, I was already up over $80,000 on the day on SYPR. So I was in pretty good shape right here. Now, all of a sudden, pulls back and comes all the way back down to the low. It really doesn't even hold its level. It just really just comes right back down. So what I didn't wait for was the first pullback, the confirmation that it was holding the volume weight average price. I took the aggressive trade right on the breakout, and then it just immediately rejected. And so what it ends up looking like is a false break of the volume weight average price. Because long traders like myself jumped in for that breakout, as soon as it couldn't hold, we were selling. But then you know who else was going short or selling? Short sellers, right? So there we got that sell off right down there, back to the low. So we have that imbalance then to the sell side. All right, so that's what short sellers are looking for, those false breakouts as an opportunity to go short. So let's see, that video is in the right spot. Okay, so the entry. As a long bias trader, when I see a long setup do a false breakout and fail, this is the place to sell the long position and potentially flip short. Now, usually I don't like to flip flop, but this is the setup that I could do that on if I have availability of shares to borrow and I don't mind the tax hit from the trade. Now, the reason that you won't often see me take this trade, of course, typically I'm already long into the breakout, and usually if I'm already long into the breakout, the place where I would be cutting my loss, sometimes the proper entry has already occurred. So for instance, if we came up and tapped a $0.50 and there was a big seller there, I might be holding during that pullback for the second move back up, whereas an aggressive short seller might have already begun to accumulate a short position with their stop right at the $0.50. So by the time I'm selling, if I flip short, I'd actually be chasing the short position, which is not great. So while typically I'm already long into the breakout and I have to cut my losses, it turns into a false breakout. While I could potentially flip short if I have shares to borrow, I obviously dislike flip-flopping, as I've talked about. I find flip-flopping, which is quickly changing the bias from long to short, can be a trigger for me, especially when I lose in both directions, because then I get really frustrated. You know, it drops down, I'm short, then it pops right back up, then I lose short, then I go long, and then it does it again. Having said that, the indicator for me to take a short position is when we're seeing the beginning of a false breakout, sort of before the confirmation. You know, when everyone starts to rush to the door, if you're the last one, then you've missed the good entry. So the beginning indicator could be the form of come in the form of a large seller, which is going to force the first 1 minute pullback to turn into potentially a double top and resistance because of that big seller there. That will immediately cause long traders who bought to panic. One of the benefits of trading the short side is that the short resolution can be very strong, because when traders panic, that's when we can see that quick flush and that really large washout. We know that stocks often trend up and then just can drop so fast and so hard. So then that's emotion kicking in. So emotion in the market can trigger traders to buy and accumulate stocks at higher and higher and higher prices, the fear of missing out. And then that same fear of missing out, when it does start to roll over, all of a sudden panic sets in and everyone just, cuts their position at the same time, and you get that huge panic sell-off. So all those people that accumulated during the slow move up, or even if it was a quick move up, when you finally have that obvious drop beginning, you can have a lot of people that throw in the towel at that same moment. So that can create that big panic flush. And that's what a short seller would certainly look for, because that's a very quick resolution. So this false breakout into panic sell-off can also lead into a halt down. And that only fuels more panic, because then they often gap lower and keep selling because people are just freaking out. Ultimately, when we see a stock up 100, 200% or more, and they finally top out and the trend changes, a short seller could have the opportunity to hold part of that position for what could be sort of an all-day fade, where the stock just kind of keeps going lower and lower and lower. It went parabolic, and then once you're on the backside of that move, it can just fade for the rest of the afternoon. It's also worth noting, however, that long hold short sellers can fuel the short squeeze if the stock does base out and start to accumulate back up. A stock perhaps that has no news and people think it has no good reason to be up this much. They take long, aggressive, they take short positions as a longer hold time for a more aggressive multi-day swing trade, like the 800,000 share short position we've talked about on BPTH. And then when it starts to curl back up, all of a sudden you can get that panic short covering as we squeeze back through the volume weight average price, perhaps, or back through high of day. So then that becomes that, usually that's one of the reasons that the breakthrough volume weight average price can be so strong. And we talked about that in our momentum chapter 8. But it can also be one of the reasons why late afternoon momentum, like between 2 and 4 p.m., can start to really pick up, because those who took positions in the earlier part of the day for sort of an all-day fade start to get chopped out, and then momentum traders start to jump in, seeing the potential. So the target on a false breakout setup, the false breakout target could be as little as 10 to 20 cents, maybe as much as 50 cents, depending on how parabolic and extended the stock already is. The risk, as always in this chapter, will be that when we're trading against the trend, these false breakouts could be dips that get bought right back up. Someone else out there might have been short earlier, and into dips they're going to be covering to try to unwind their short position, and then those dips keep getting bought up. Short sellers see it's dipping, but it's not breaking critical levels. It's not breaking half dollars. It's not breaking whole dollars. It's bouncing off them and continuing higher. So if that's the case, then we're going to be in a position where you don't want to be holding that position as it's going against you. Stop loss on a short is high of day, basically always, unless you're the type of person that is okay with averaging into the position, but most wouldn't be. Now, if you're short below the volume weighted average price, stop would usually be just above the volume weighted average price. And the note, as always, for this section of the class, or for chapter 10, is that finding shares available to borrow will be a big challenge with this setup. So here's that example right there of this false breakout and the double top, right? So we know double tops can carry risk. We also, of course, know that sometimes the double top, as maybe you kind of got here, can become a break through the high of day. So when is it going to be a double top rejection, and when is it going to be a breakthrough high of day? Well, ultimately, it will be educated intuition that helps you sort of make the prediction of which it will be. But I would argue that in this area here, a red flag was a red topping tail candle at the high and an extension off its 9 moving average. Back here, we had a green topping tail candle. We had a false breakout right here, but then by the time it started to curl right here, we were coming much closer to the 9 moving average. So we'd had a longer period of consolidation. And if you were short in this area, this is where you'd start to be like, okay, this isn't really fading. It's kind of opening up. But right here, you know, it just kind of comes right back up to this double top. And again, if there was a big seller on the level 2 right there, that would have been the early indicator that this is probably going to fail. Here's another example. In this particular example, again, the same one from the intro, you see how we get this nice move on the stock. And one of the reasons that, I'll go split screen here. So one of the reasons that some people will really like short selling is for the same reason that you might like reversals, which is that you don't have to chase the move. You can let the stock squeeze up, and then you start looking for those indicators that it's getting top heavy. The indicator maybe of a topping tail, the indicator of some of those big sellers on the ask, and maybe then the first candle to make a new low, or in this case, the first candle to do a bull trap, which is to double top, break out, and then reject, because you know that that is going to create that big whip. It doesn't mean that short selling is easier, but I think that it can be more attractive to some people who just have a really hard time getting on board with chasing momentum stocks. But for my personality, I really like to trade stocks that are moving up very quickly. You know, if the stock isn't moving up at like a, I don't know, 90-degree angle, I want to see stocks going basically straight up. And that's obviously, those are going to be some of the biggest movers. But some people will have a really hard time buying a stock that's just gone up, you know, 100% in the last 5 minutes. For me, seeing that is the indicator that this is the type of stock that can go up another 100%, and I'm looking more at what I think it could do. I recognize my risk and, of course, set max loss and everything, but that's just, I think, to a certain extent, a personality trait. So this is sort of the characteristic bull trap, and we just see them again and again and again and again. So let's look at another one right here. So this is again from the just that I highlighted in the intro. So first, you actually have a bull flag that was fairly extended. This stock goes from $1 to $3. That's 300%. So it squeezes up. First 5-minute candle to make a new high, even though it's a red topping tail or red sort of shooting star candle, it still ends up working. And hey, you know what? Look at that. Perfect. SRTS. Right in this chapter, we just got a false breakout on SRTS. All right, so let me move my video to the bottom corner. SRTS, bull trap, right there, whole dollar of 6. Okay, so this stock, which I didn't really like today, I saw it was moving higher, the float's a little higher, and it seemed choppy. To me, it seemed choppy. Now, one of the things that I do notice is when I see a stock is easy to borrow in Lightspeed, I can sometimes be a little bit more cautious on it trading momentum, because I'm like, oh, if it's easy to borrow, you're going to have a lot of beginner short sellers just shorting kind of right into the first squeeze. So the first couple squeezes, it may have a lot more resistance because it's easy to short. And it's not going to get exciting until it's clearly squeezing out the early sort of beginner short sellers. So in this case, it broke through the whole dollar of 6 right here and hit a high of 609. And we talk about that so much. The break of 6 up to 610. Couldn't break 610, reverses hard into a halt going down at 525, right? So that's that big dramatic rejection. Now this stock already had choppiness written all over it, which is why I had looked at it earlier and I was like, no, I don't want to trade it. It did a false breakout right here on the 1 minute. That was the first 5-minute candle to make a new high. It sold off here below the volume weighted average price. This was choppy in this area. First 1-minute candle, false breakout, a flush back below VWAP, tries to get above it here and fails, tries to get above it there and fails. So this is a stock that already has shown a tendency of doing false breakouts here and then finally again here. This one just was the most dramatic with the highest volume. It is possible that there were some short sellers who got trapped down here or got trapped on this false breakout right here and then did cover here. or covered as it squeezed up in that high volume and then repositioned with a new short higher. Sometimes when I do a dip trade, I'll do a dip, I'll stop out, and then I'll add back. Or when I'm, trading long, I'll buy the high, I'll dip down, I'll sell, and then it comes back up and I get back in. And short sellers will do the same thing. They might take a short, they take a first loss, get out, and then reposition and get back in. So the getting out is covering. So that's sort of, again, when you have that very active trading of getting in, getting out, getting in, getting out, that's all going to be reflected in higher levels of volume. So a big false breakout right there on that bull trap, which hopefully not too many long traders got caught in, but obviously it's high enough volume that some did. So very similar here. Okay, this is a premature breakout. So a premature breakout like that, it barely has time. A premature breakout comes right back down. Notice this is on the 1 minute chart. The stock halted up. It went from 8 to 880. So it squeezes up about 10%. It gets halted. It opens higher. It does a dip and a rip, then pulls back again, dips back to 9, pops up, dips back down, and then squeezes up and then comes back down. So what I can tell you is that the 10-second chart looked like this. Choppy, 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 choppy. And then it starts to base out and goes back up. But I would have had a really hard time buying right here. The first candle to make a new high, because what is going on with this candle? It's an inside candle. That candle neither made a new high nor a new low. It's an inside candle. So while occasionally if a stock really has strong momentum, I might do a trade off an inside candle, the volume here was very low on that resolution. It's not really going to be until the stock really starts to make an effort to move back towards the high, the volume is going to come back in. And in fact, it does get back to the high and it squeezes higher. And this could be an example where you got long, you stopped out, and then you get back in, and maybe then it does work. Or maybe you get stopped out a second time, you say, all right, this stock is just too choppy. All right, so here's another 1 minute. So a little kind of red to green move at the open. Stock squeezes up, pulls back, comes back up, squeezes up here to 355, pull back, right underneath the $0.50. So it breaks the $0.50, then the pullback is right below it. First candle make a new high, boom, up to 360 right there. And then rejection, back below the $0.50. That's the same as a micro pullback right underneath 6, pops up to 610, cannot break that 610, comes back down. Can it hold 6? Can it hold that psychological support of the whole dollar? No, and it flushes. And in this case, no, and it flushes. So here, a short entry would have been probably 350. I probably would have been short at 350 as it breaks back below the $0.50. Stop is at the high. I really like doing, that's the trade that I do like quite a bit because it adds a little more confidence for me. So that's actually been one of my sort of most popular ways to trade these is if this had broken, and it didn't, but if it had broken to 10.05, then short coming back down through 10, stop is at 10.05. And because my stop's at 10.05, 10.10, that's why when I'm thinking about going long, I'm always saying if it breaks 10.05, if it breaks 10.10, that's where we should start to pull away from the $0.50 whole dollar as more traders are covering shorts and more long traders are jumping in now with confirmation that it's holding. So you can see how your view of the market is so much influenced by understanding both sides, long and short. So there's that false break and breaks back below the $0.50. Now that's exactly what we got here on SRTS. So I wouldn't have been shorting. I personally, if there was a big seller at $6, like 100,000 shares or 200,000 shares, maybe I would short sell at 97 or 98 as we're approaching that level. But usually I would let it break. And then as it comes back down, go short. So short is at 6. Because that's also the place where if I'm long, I'm stopping out. If I bought for the break of 6 and it goes to 608 and then comes back down and breaks 6, I'm stopping out. That's the spot potentially to flip short. Or if you're short biased, that's the spot where you're looking for the short. And with a situation like this, if you're short up there at 6, now you're positioned potentially for a nice long hold time because this chart pattern is broken. You know what I mean? A broken chart pattern is good for short. A broken chart pattern, as a long trader, we don't want to hold it. But as a short seller, it doesn't have to be this isn't a perfect short chart right now. It's not like it's a clear head and shoulders or an inverted head and shoulders. There's not a clear pattern here other than it did a nasty false breakout, and so long traders won't like it. So because long traders won't like it, if you have the short up here, you could stop now at this point, stop at volume weighted average price, and just hold it. All right, so on this one here, we got, so this one did a red to green here and got above 5. It did a dip, popped up, broke over 5, came back below it. Short could have been at 5, stopped just above it. Now that right there was not a super clear bull trap, but it was obviously a false break of the whole dollar. But then it does come back above 5, up to 520, and this high was like 522. It does break back below it, down to 440. It then comes back up, 1 minute pullback right here, false breakout. But now you can tell that we're forming a bull flag. This is a 1 minute chart, so if we say, all right, this is 937 right here, so 938, 939, 940. All right, so this candle was right here like this. Let's draw it out. So this candle was like this. This candle is like this. Like this. This candle actually made a new high. The low is right here. The high is right here. And then this candle drops down to here. And then this candle makes a new high in the 5 minute up to here. And then this candle looks like it's sort of tiny right through here. And see how we're now visualizing this breakout, right? That's going to happen right here. So if we can break this pivot right here of 520, that's where we would probably expect volume to come in. And right in this candle, as it breaks, the second it breaks that level, we do see that surge in volume. So this was a 5 minute setup that would have happened right here. But in this case, it broke up to 540. The 5 minute chart had already done one false breakout here. The 1 minute was choppy, and it couldn't hold that level. It did a topping tail, immediately reverses back to 5, pops up for a second, breaks back below 5, and again, that's another opportunity to be short. Below 5, stop at 520. So in that case, maybe a little bit of a bigger stop. This is an example of a stock that was a gapper, squeezes up on light volume, and then immediately reverses. As it consolidates here, the low of the opening range is a possible short. This one's not as clean though, because this is on such light volume. So realistically, I don't know if I would have really traded that one. I don't know. All right, so now we've got a couple live trading examples. So let's open this link here. So, all right, so here we go. So I call this one a $0.50 drop on CLST. All right, so let's look at this. Oh, I think we already looked at this one. So this is the 5-cent tick pilot program stock. Got short at 549, thinking that we were breaking through the $0.50 to the downside. So it did basically a false breakout. It squeezed from 5 up to 550, 5, and then reverses here. So this is the one that I showed you, I think, in the reversal section. It's a slow-moving stock. It, is kind of choppy, but that break back below the $0.50, that was the spot right there to be short. So it ended up working, but not great resolution. So the short was down at 550, 549, and the stop was 10 cents at 560. I have another example here that I want to show you. I think, let's see, copy. Okay, so let's look at this one here. All right, so right here on this stock, Fran, it's our leading gapper, as you can see. It's up 92%. It's a 2.8 million share float, which is all great. You can already see it did a false breakout at $10 right here. So that would have been the break over, and then you could have shorted coming back down. So now as it comes back up to 10, what's it going to do? So let's watch. We've got a minute to the bell. Let's fast forward this a little bit. All right, so this is the one where, if you recall, we looked at this example. I tried to buy it right here. I was kind of thinking I was going to be getting in more at 10, but we've got like a 40-cent spread. So I filled at 10.09. It pops up here And in this case, as it came up, I took some profit off the table, and right here at 40, hidden, oh, I think it was 40. Right there at 40, we have a hidden seller coming up, approaching the $0.50. So on this stock, and this is a pretty aggressive short position because I'm shorting with right at what I see as a hidden seller, which is right below the psychological resistance of 1050. But clearly there's a hidden seller there. It's not breaking. And then you get that rug pull. And if you chase it, you're all of a sudden getting in at $10. So now if it holds below 10, and I end up covering it just to take some off the table because it was so volatile. But now at this point, if it holds below 10, I'm in the driver's seat. Now, right now it's bouncing off of 10. 1014 by 1027. So, is it going to come back up through? And then it does. It surges back up through that level, through 1070, and it goes higher. So let's watch as this moves a little higher. Is it going to hold above the $0.50? If it breaks the $0.50, that could be a short right there at 49 for a false breakout to the upside. So let's back that up again. So it broke through the $0.50, and then the question is, can it hold above it? And it cannot. But of course, with this type of trade, right here could have been the short to anticipate the breakthrough as you see those sellers. And then immediately as it breaks, you could cover half on the break. Again, using hotkeys, the same as we do to the long side. Now, we don't want to see it get back above 1050. We want to see it hold below that level. Now we'd like to see a hidden seller at 1050 right even. There's 49, but this one has already shown that it can move fast. There's 39. Cover a little bit more down here, maybe at 35. And then I'm ready to cover if it pops back over the $0.50 more. So now I'm coming maybe into the driver's seat as long as it holds below 1050. But if it breaks back above 1050, I'm going to want to get out. So see on the 10-second chart how this ended up being false breakout, took the short, it flushes, then comes right back up. So in a way, that could have become a little bit of a bear trap. Although honestly, that first entry was a little higher risk, shorting into a hidden seller, especially right at the open, because that's the time that they're most likely to break. It dips, it does rip right back up, forces short sellers who were not covering, like me, but holding, to cover. Then it drops back down, and then on the break through 1050, I'm short. Now I want to, and I've covered a little bit on this dip, but now this is starting to look like a bull flag again on this 10-second chart, back over 40, right? So right there, it pops back over the $0.50, and now it's actually starting to look like an ABCD pattern, this consolidation on the 10-second chart. The 1 minute, we're still just only 2 minutes into the day, but now if we get the break back over 1060, and there's a bigger bid there at 1040. Spotting the hidden sellers, that does take a fair amount of experience. That's something that the more you watch these as they trade and you see, what I look for is, I see a lot of buying here and it's not breaking that level. Now there's only 200 shares for sale. It goes to 44, but then immediately comes back down. So it's just unable to break that level. I got my short there, 36. It's not breaking 40. There we get that quick flush, cover into that flush. Then in this case, it does pop right back up and over 1040. If it can break that level in 1050, orders at 1052 for a possible long. It does come back up here, 26, 37. Oops, 37. There we go, 40. And then look at all that volume, surges right through to 70. 65 by 70. And this is really early in the day to be taking this kind of like short position. I usually would find that this would be a little easier a little later in the day. As I said, false breakouts are more frequent later in the day. In the morning, you still have a lot of exuberance. You still have often a lot of volume, and these can continue to be pretty strong. So let's see, do we break this? So we do. So let's back this up here. So we get the break through 1060 right here. Nice. Up to 73. Not bad, but double topping it looks like. So that does look like a double top. And this is just a stock at this point that's just getting really kind of choppy. So I don't know if there's a super obvious setup on this at this point. Now it looks like, let's see, just fading a little bit more. Now, when it starts to fade a little bit more, that's obviously where you're getting that confirmation that, all right, now it's starting to fade. Now we've got the first 5-minute candle and it's red. Look, this 5-minute candle's red with topping high volume. So this is where you would potentially want to be holding it short. Hey, girl, come on. Come here. You want to go outside? If you were holding it short here, now it's breaking below the volume weighted average price. It's starting to really move in the right direction. Right, so the question is, you know, while you could just short the break of the volume weighted average price, that's definitely a very, you know, clear line in the sand, but it could get right back above it. So was there an opportunity to short it, you know, higher up? And we could have looked maybe at a break back below this level here of 1020, or maybe the double top up here, if you were more aggressive and willing to be more aggressive. All right, so let's move that here. Okay, so those are my two examples. Let's check in with this one here, SRTS. So this one has continued to fade all the way back down to 479. It's a pretty big fade, all things considered. I want to see, I'm curious if I have any good examples of, just from yesterday. I'll just see on GameStop. This is a tricky one. So on GameStop right here, this is a 1-minute pattern. I was looking for the breakthrough 170. That makes sense. We're starting to look for the first 5-minute candle to make a new high, so I don't think that's a short. Look at that. Oh my God. $56,000. 11,500 shares at 170. So that was a nice breakout. That was a nice breakout. But I'm looking to see if we get a good reversal up here. So, you know, this one on the 5-minute, it's a breakout here. But remember, the 5-minute candle, and I don't have the time in front of us I have it covered. But this 5-minute candle, you know, the question is, how is it going to actually close? Because if we still have 2 minutes left on it, and it then closes, if this drops really hard, then all of a sudden this 5-minute pattern becomes broken. And then that is obviously a problem. So right here on this, I'm in at 73.16. And now look at this 5-minute candle. See how this 5-minute candle has got this high and now it's red? So in this particular instance, there may be some people who were looking at this chart, and as I look at it right here, I'm looking at this thinking, if it breaks 172, right? What happens if this thing breaks 172? Right there. It's going to probably drop. And what's going to end up resulting in is a false breakout on a 5-minute chart where we have this topping tail candle. So let's watch what it does at 172. So there's 172 on the bid, 172.60. Okay, so I put out sell orders. I was trying to sell this at 181.86, but I only filled 91 shares. And then I got slippage on my exit, 2 points of slippage. I wasn't fast enough to sell. Again, now when you have an obvious line in the sand like that, you're gonna have a lot of other people that are selling and or shorting at that same price. And you might not get good fills on your exit. So I am filling a little bit there at 72.97. Someone's buying my shares, but not enough. I'm still holding 3,400, and I sell at 71.15 and 70. So I basically lost $7,000 in slippage on that break right there because it dropped 2 points. Now this 5-minute candle, now look at it. Topping tail. If we break this, so now we have a buyer at 170. What happens if we break that level? Whoa, just like that, gone. Someone just bailed on 20,000 shares. Let's back that up for a second. So we see that 172 being the recent support in this case, and also the whole dollar. If that level breaks, this is no longer a tiny 1-minute micro pullback right underneath the high. It's a false breakout. So let's watch again. So I'm in at 173, actually. This was a $9,000 loss. Because it drops right here, breaks 172, goes 172, 171.50, 171. I'm down 6,000 right now. Now 7,000, now 9,000. So I sell and watch it break 22. Watch it break that 22,000 share seller. Right there, it goes. Instantly gone, down to 69. Now there's going to be some panic because this is a false breakout on the 5-minute chart. Not only are you going to have 1-minute traders bailing out, traders who bought that 5-minute setup are bailing out too. There's 68. 68 on the bid. 67 on the bid. Look at that drop. So that's great resolution to the short side. It's not great to the long side, but this is going to help you because as you start to recognize, okay, this level of 72 is important and it's kind of a flat bottom. If we break that flat bottom, I might want to head for the exit as it's starting to look weak here before the apex, before that flush. Let's see how much it keeps dropping. There's 67 on the bid. 67, 28, 66, 60. So, unfortunately on something like this, this type of false breakout ruins the pattern. So if you're short at 72, I mean, you might be able in this situation to cover half down here and then hold it. Is this going to be a bear flag and then a drop down lower? Yep, there's 65. So this is where on the short side, you can kind of be in the driver's seat. All right, this thing is just fading. And the weaker it looks, the more long traders bail out, and you just continue to get that sell-off. So there's 65 on the bid, 66 on the bid. I'm changing around my hotkeys a little bit on this one. So the reason I changed my hotkeys on this was because I had to modify my keys specifically to this stock. I was changing my selling keys because I was annoyed that I didn't fill my full order, sell ask on the bid. 15 cents wasn't enough offset. So I said, no, I got to move this to 50 cents. I need to give myself, I don't want to do a market order, but I need to give myself more room because I need to get filled on this. And I'm not getting, I was not getting filled on those trades. I kept pressing the sell button and it kept going lower. So I went in and modified my hotkeys for the rest of trading. Look at that. Look at that drop. Oh, okay. So this was the open. Okay. So now at the open, we're coming down to the volume weighted average price. And that right there. We'll save that for the bear flag chapter in this section. That was a nice bear flag. This right here was almost potentially, could have been a reverse off the volume weighted average price, but the market was pretty hot. It did break above it, but then it came back down. All right, so we're going to look at some more examples of GameStop, but let's see, did this do a false breakout, that one? Yeah, so we're gonna come back to GameStop in the next chapter. All right, so let's go to the next chapter, chapter 10, or maybe it'll be the next setup 3 or 4. But anyways, let's continue on chapter 10, setup 2, shorting a trend shift.